This is session one, the Account Aggregator, Reshaping Credit Markets and Securities Market Offerings. May I please request Moderator, Mr. Anuj Kumar, Managing Director, Computer Age Management Services Limited, to join us on stage. Let's welcome him with a round of applause, ladies and gentlemen. And also request our panelists to join along with him, Mr. Ashish Kashyap, founder and CEO, INDmoney, Mr. BG Mahesh, CEO, Sahamati, and Mr. Sachin Seth, Regional Managing Director, India and South Asia, CRIF. A warm welcome to each one of you. And our dear audience members, the early birds of today, we request our moderator, sir, to lead the conversation. Thank you.
Thank you. Good morning, everyone. Really delighted to be hosting this panel and moderating it. The topic around account aggregators has been very close to my heart for several years now. I've seen this concept from the incipient stages back in 2018-19 to where it has grown to today and the almost limitless potential it has in its efforts to drive transparency, create citizen level utility, population level utilities built around ease of credit and ease of advisory in capital markets, and several other use cases continue to emerge over a period of time. I have a very distinguished panel here with me. Ashish Kashyap, who's the founder of INDmoney, a serial entrepreneur, who first excelled in the travel and hospitality space several years back, and then founded INDmoney in the last 6 to 7 years. So thanks for joining us, Ashish. We have BG Mahesh. And Mahesh and I go back almost 7 years from the times that Sahamati was being set up. I remember myself visiting the RBI offices, requesting them for us to be the first licensee. We, in the end, were CAMS was the second one. So Mahesh was active since that time. Sahamati was a one-person organization. I don't know whether he liked the term founding father, but that's how I would think of him. And all these years to sustain an organization like this and to get it to a level where it is the acknowledged SRO with all the trappings and the organization and the ability to influence and build things, I think he's done a great job. And then we have Sachin with us. Sachin has deep history and background in the Indian financial markets. Coincidentally, I just discovered that he and I were together at IBM at some time. And he just told me that we were in an offsite together. So yes, Goa, of course, Sachin. I'm just trying to remember the year. But most recently, he joined CRIF as the managing director of India and Southeast Asia. So deep experience in the financial markets in India, and now running a credit bureau for himself, including an account aggregator practice. So very pleased to introduce this group with you. And we perhaps have a little over half an hour to go through the proceedings. So I will perhaps start with you, Mahesh, and request you, because the audience, some of you may be aware, some of you may not be aware of all the background work that happened, all the challenges since the time in 2017-18 when this concept was being evangelized. And to evangelize the concept and bring it up to this stage must have been a very arduous and long journey. So just a few thoughts on how tough was it? How did you make the choice to be here? And then you've seen headwinds and tailwinds both in bringing it to this level. So just wanted, if you could set that context for us.
So thank you, Anuj. We actually started the effort exactly 6 years ago. And the way to be building this entire ecosystem was that, even though it is a digital one, I would say that we went to all the large banks, face to face, and conducted, the workshops on how account aggregator framework would help their entity. Of course, in the beginning, everybody was very worried that they're going to be sharing their data, and we had to remind them it is the customer's data and not the fiduciary's data. So like that, we went, for the first 18 months, we held all the workshops with the help of, few of the account aggregators who were already there. We went entity to entity, and we used to host the other workshop with, 20, 30, 50 people, and like, that we built. And in September 2021, with 8 private banks, okay, in this ecosystem, actually, we went live. Actually, I would say everybody was an FIP, there were no FIUs. So everybody was waiting to give data. Okay, that's what happened. And in June of 2022, the finance minister announced by end of June 2022, all the public sector banks had to be on AA. So we all were working very hard to actually get them live on EEA, and obviously it was very hard for us to convince. And once she spoke in a speech that it had to be done in 4 weeks, in 4 weeks, all the 12 banks were live. And okay, that actually moved the needle because all the lenders were actually keen to have easier but okay consented access to all the data over there. And from there, I think the ecosystem, has been building up well. Now we have almost 1,000 entities which are already live on the ecosystem. About 17 account aggregators are out there. And every month, the number of consents which are raised is about 3 crores every month. The amount of the data pulls, which happens every month, is about 40 crores every month. And in the last 2 years, the number of data of fetches which have happened is 500 crores. So obviously, there's a lot of action which is happening. But the last point I want to say is, while all this action is happening, we need to speak. What is the impact? Okay, there's no point in simply data flowing from left to right, but there is no action. So the impact is now, as of today, every month from what we have seen is at least 17,000 crores of loans are being dispersed every month. So we have seen from where we started, I think it is taking off actually well now. And yeah, we still have a long journey, but it's a good start, I would say.
No, great. Congratulations on having brought it to this level. I think the statistics are already looking very, very impressive. But yes, we can also say that we are just beginning the game. The game is long, and this will scale several X times over as acceptance increases. Let me turn to you, Ashish. As a serial entrepreneur, you built almost category first properties in the travel, transportation, and hospitality sector, and then came into retail financial services as a stockbroker, as an advisor, now scaling operations in Gift City. And you've been a user and early adopters of the account aggregator model. Has it delivered to your expectations? Is there more to come? Do you have full heft and full commitment to this? And what are your expectations? What is it that we are not doing yet that you would like us to do over a period of time?
Yeah, let me actually tell you the story of the birth of INDmoney was a lot of my personal pain area because there were fragmented finances. And I would typically ask a traditional wealth management like this before starting up the company that, listen, can you kind of create my net worth? Right? Of course, we talk about Elon Musk's net worth. Hamari bhi bata do, right? That kind of stuff. And when we got the company started in a very scrappy way. So we would tell consumers, upload PDFs, and we would parse them. And consumers would love it. But obviously, the insight there was that the consumers are lazy, right? They wouldn't want to kind of download and then upload. Though we would do a great job of it, and we would give a lot of insights to the users. But it was very clear that the personal finance management use case is really important, right? It's like truly democratizing money management for the world. Like the super rich, of course, have their accountants and have all the workforce to do it. But in general, giving this access to all the millennials and the Gen Zs of the country. And while we were trying to build this, we started seeing the emergence of Account Aggregator. It was like a pretty nice moment for us because we said now there could be a formal pipeline for a consumer to give consent and to be able to access and pull his or her data and bring it all together. And we of course started working with Sahamati, and we started working with CAMS. We started working with a couple of other AAs. The initial experience was that unlike lending use case where consumer is hungry, right? Usko paise chahiye apne bank mein jaldi se. Here it's a personal finance management use case. So the funnels are really important, and the failure rates were very high. We would look at those funnels and we'll say if at the top of the funnel 10,000 people came, only 1,000 people got their statements, etc., etc. And I would speak to BG Mahesh sir, and I would say a problem. He says, listen, we have to solve this as an ecosystem. So we chugged along. We obviously kept the feature then hidden. We kept all our other use cases more at the forefront, and we chugged along. We kept working with the ecosystem, and the success rates kept improving, and the use cases also kept getting added. Today, I must say that the success rates from, let's say, 5 or 10% just 3 years ago is now up to 70%. And I'm assuming that in the next few months, this will become 99%, which I think is a total game changer. Lastly, I think what we have seen is that people who are able to understand their money in a very simplistic manner will always be better investors. And hence, this combination of enabling consumers to manage their personal finances in one place and being able to invest and diversify is so critical for our existence and also our differentiation as a value to the end users.
No, that's a wonderful enunciation, and absolutely, I remember the days when the friction was the only word to describe how the account aggregator pipes were set up. 5% success rate was considered good. There were time windows when some of the FIPs could not support giving out the data. So you had to time your request and tell your clients when to come in. So all of that happened. Hopefully all of that is behind us. And I wanted to go to Sachin, but before that, I'll just stop at Mahesh again for a slightly what I think could be interpreted as a controversial question, which is that citizen data is citizens' data. The successive, I would say, frameworks in the country, regulatory, operating, all of those are pointing to the fact that the data belongs to the citizen. However, there has always been a contrarian point of view from what are called FIPs, but let's say principles, that they have built 30 years, 40 years, 100 years. They built their franchises over that period of time. They've reached the remotest corners of the country, and just purely creating a digital facade or a veneer does not amount to the democratization that has taken 100 years to build, and they have a point of view. And this point of view was a very, I would say, was a topic of discussion in that time period. In the first 3 or 4 years, is perhaps a little muted now, but was a very hot topic for discussion. And I just wanted to stop by with you, Mahesh, just on your thoughts on how did you see this behavior? What did it take? What kind of conversations did you have to slowly eliminate it? And I know these are long processes. That's a 100-year-old thought process which will not go away in 2 or 3 years. But what was your experience?
See, I think first it is important that when you actually get into all such conversations, you should have your listening capability. You have to hear, what is their concern of the large FIPs. Okay, and you should have patience. Obviously the amount of experience they have is a lot more, at least compared to me. So one of their issues was, of course, it is about the loss of business. Their customer is going elsewhere for a loan, but that is already happening. It is not that just because AA came now, your customers are applying for a loan elsewhere. That was always happening. Now it is digitally. But one concern which they always have is where is this data going? Because the FIP is not having the visibility by design, who the FIU is, who's getting the data, and what is their compliance, etc. So because all the FIUs which are under the 4 regulators are not having the same level of compliance. the data compliance. So that is the actual concern they have. But then also, we spoke to them about if they don't join the AA network, what is their actually the opportunity loss. See, we all speak about the MSME lending gap is huge. Like now, I think if I'm right, every year it is at least 30 lakh or crore a year is the gap. Okay, it isn't the size of the market, but the gap. But how are you going to get actually the piece of that pie? It has to be technologically solved. Okay, obviously you can't hire 1,000 people to be going after that market, and the only way to increase their loan book size is also to give the sachet size loans. One, and also the amount of the fraud has to go down, right? So as you all know, like all the lenders will be able to actually inform you that the amount of fraud which they see from AA is shrunk to actually to is zero. There is no chance of a fraud. So we had to show the use cases, their existing use cases and the new use cases on how it will help them. And I would say, we worked with all of them, month on month for at least a year and a half, 2 year, and okay, then it has changed. Then we were able to convince.
So very interesting, and I have been part of some of those conversations myself, so I can tell you that it's been an arduous journey. On the question of security of data and consent mechanism, I will come back. I will come back because I think those are important topics to at least touch upon, if not go deep into them, and those are topics which are close to my heart also. So I'll come back to those. But coming to Sachin, Sachin, you have history, deep history, both in technology and in retail financial markets. And today you run a credit bureau. Now, there was a time when different models of engagement were thought of between credit bureaus and account aggregators. I do not know how much of that has emerged. Is there unification of forces of any kind that is being thought of in the industry today? And the second part of the question is that with particular focus on the lending use case, now we can argue that perhaps the use case is the lending use case today. Everything else is also there, but perhaps is still not the core. What do you think has been the adoption trend? Have we delivered the promise? Are we going to deliver it? It's perhaps too early to say that we have delivered the promise, but are we going to deliver the promise in the next 2-3 years? I remember in the initial years, this entire question, when we listen to national leaders, this question of national productivity is at the core, saying how can we become a more productive nation? How can we do these things easier, more smartly, quickly? Mahesh just alluded to the credit gap for MSMEs, but there are several other segments. So what are your thoughts on this? And how have you been an early adopter in this area? And how do you see the future?
Thank you, Anuj. Thank you so much. So I'll just go a little bit back in the history as Mahesh talked about, and that is the time I think Mahesh and team were probably planning the concept and framework of account aggregator. I used to be a partner in consulting company, and I had built a platform, complete end-to-end digital dispersal platform, instant gratification, 180 seconds, you get it or don't get it. If you get it, it comes to your account. That platform used to be called that time Dhani. And while building that platform, one of the very interesting question came that how can we, bureau is one side, we can get, more surrogate data, etc. We can do address match, whatnot. But how can we make it so foolproof that, within that 180 seconds when the person is on the mobile app, we are able to control the fraud, we are able to validate it's a genuine person, ability to pay, intent to pay, everything has to be done in that. That's where what we did is that we did use a so-called earlier, what you can call it, a rudimentary version of that, log into bank account, net banking, scrap the bank account statement, and then use that for basically a better underwriting. And at that point of time, account aggregator, this 2017-18, and account aggregator was not born. One question came to our mind is that, and whether customers will take the pain of going, giving their ID, password, etc. We were surprised that with this kind of journey, when we did a survey with the first batch of customers, 21% customers actually ended up putting their user ID passwords just to get a loan instantly. And company was not so very well known. So you can imagine that having a frictionless journey, having an instant gratification, having an instant decisioning, and you talked about efficiencies, right? Same person applying to loan for 7 places, 20 banks or NBFCs marketing them the loan, eventually the person gets one loan. The ratio is like 1:10:1 at this moment also. So that's where I think the account aggregator has really leapfrogged that journey. That you don't need a statement, you don't need even a digital statement through the login. What you can get is all the possible statements what consent can provide you. And then you can do categorization, you can do humongous amount of analytics on that. In fact, as we talked about a little bit of fraud also, I think we are in this business and we realize with most of the other peer group that a person's account can tell almost like everything, like you take a lab diagnostic report or a CT scan, which tells you everything about what you are as a human. It can tell you everything about what exactly has been your life. Because you cannot go back in the history and change your account, right? And you don't know you are going to apply for a loan 6 months later. And it is such a beautiful way of sort of getting complete picture. Obviously, there has to be consent. We did discuss that growth has been happening 18-20% month on month. Lending part, as Anuj talked about, obviously we are running a credit bureau, one of the large data pools. Credit bureau gives you the historic behavior of a person and predictability on that historic behavior. It could be 3-year data, 1-year data, whatever it is, right? Now, when you look at a bank statement, it gives you basically the credit bureau score is built on the last, let's say, 12 months of your financial behavior, whether you did pay on time, how much you are leveraged, what is your balances, what kind of loans you have, etc. The beauty is that, if you combine it together with the account aggregator, you are able to do swipe in, swipe out. You actually may not have a great score because you are new to credit, or maybe you probably had a little bit of a challenges in paying off at time, but maybe you have got a better job, maybe you have built a business, and you are able to see the uplift in the balances of the customer or the kind of sort of income profile. And that is what exactly, Anuj, I wanted to talk about, that we as a team together with the industry and our clients, we are able to actually make this as a very strong and powerful use case. Because the most difficult thing in the industry in lending is that which customer to choose and which to drop. A single bad customer can write off your 10 customers, the profitability, right? So that's the whole swap in, swap out of basically that I may have a 700 score, but I can have a bank score, which some of us have created, which is mirroring, and which could be 750, which means that my credit score is fine, but my bank score is better. So I'm going up, right? And it is happening a lot. You talked about small businesses. I think we have been working. Initially, we saw resistance, but I think last 3 to 4 months, I'm seeing a humongous amount of sort of a positivity. In fact, customer come and tell us that, how can we use it better, right? And it's becoming less and less friction in the whole journey. And I think this is where the way to go. So I'm really optimistic about it, and it's really working very well. Yeah. Thank you.
Well, that's wonderful to hear. Wonderful to hear that real adoption is now happening. And you rightly said that, Sachin, that there were people who would download 6 or 7, sometimes 10 lending apps. And if in 21% of the cases the man was ready or the woman was ready to give their login ID and password, you could understand everything that we talk about, data security and privacy and building, Chinese walls around us. How much does that apply at the citizen level? I think that's a telling statement. I must also tell you in the process of this a small story, that when we were doing customer analytics in some of the accounts, and like Sachin said, that these bank accounts are a telling statement, not just of your financial health, but of the way you live. I remember I spoke to one of the journalists in an interview 2 years back on this topic, that we saw 16 rupee UPI debits. And it was difficult to make out because they were happening in an account, let's say, at the same time. And we checked on whether it was a packet of chips or a bottle of water, but it was a cigarette. Because it was at the same time, people take cigarette breaks at the same time. So you start imputing lifestyle connotations through a bank statement. Now, will an insurer be interested in taking this and doing underwriting was the question I asked. And some of them might someday start using these things, but those are very, very interesting things. So I was expecting, by the way, for Sachin and Mahesh to think about adoption in the credit markets as a good measure, as a great measure of success, but in the non-lending markets. Ashish, I'll come back to you on this. In the non-lending markets, advisory, wealth management. At one time, it was said that we can start managing wealth for people, not those who have 5 crore rupees, but let's say somebody who has 10 lakh rupees, because pulling a statement every day or every week will only cost a few rupees, and you can automate the entire process. How are we doing there? Do you see the FIP participation at the same levels, the friction having gone? And then building use cases yourself, is that at the kind of track that you imagined 4 or 5 years back?
Yeah, I mean, I think still, as you all put it, still we are at early days. But some of the use cases, so typically if you see traditionally in the wealth management, the prescribed way of doing risk profiling, I'm sure some of you would know, is asking questions. कि क्या आप market में रहोगे अगर market गिर जाएगा, right? That's the question you ask, right? So there is a questionnaire which I think is flawed, right? Because you're asking a question and not really deriving behavior. I think one of the very powerful things is that as a company, we are able to derive a behavior and tell the user that, listen, you are an aggressive risk profile person, the way you behave. And we could even recommend that, but for your age, you need to be kind of moderate, right? Because at the end of the day, the whole point of wealth management is asset allocation. That's the crux, and diversification. And how you do it is based on a person's risk profile, his behavior, his age, his goals. So we can actually, from a traditional way of doing financial planning, which was in any case not done for anyone because it was very cumbersome and expensive, as AA framework scales, we as a company can fully automate it. We have automated it quite a lot. We can fully automate it and truly deliver value to the consumers, which he or she wouldn't have done it because of so much of friction. And that can really help the users reach their goals, be able to achieve certain milestones, which he or she wouldn't have been able to imagine. It was too cumbersome, or they were like large Excel sheets and questionnaires. So that's one of the big use cases. I think the other new use cases which we should kind of think of developing is family level management. Because if you see, money management is not a individual phenomena in this country. Money is managed at a family unit level. You, your wife, your kids, or you, your wife, your parents. Sometimes the father is managing the money, sometimes the son is managing the money. And that's going to be another extremely important use case. Then there are some tactical use cases, right? I'm sure, how many of you all are running SIPs? Everyone? Everyone is running SIPs, right? Now, do you know when, if you have a non-UPI mandate, if you have a NASH mandate, and if that SIP gets bounced, what happens?
You get a charge.
You get a charge, right? So there are lots of such, I can name 100 tactical use cases. So here, if you're able to just tell the user that, listen, you switch your mandate from bank A to bank B so that that 500 rupees is not charged. Because we are really abused by the consumers. ये 500 रुपए आप लोगों ने ले लिया, आपने ऐसे हमने नहीं लिया, bank ने लिया, right? So Anuj, there are like lots of such tactical use cases which just makes it better for the consumers if there are leakages in his financial life and so on and so forth. So I think, it's just unimaginable right from the surface to the depth.
No, that again, I think directionally appears to be very exciting. I'm myself a proponent of the fact that long queues, wait times, downloading 10 apps to get one loan, and all the 10 guys are trying to do your credit rating, and some of them may end up doing FIs and things like that, is just a wastage of national resources. And once we get there to what Ashish is saying and what Sachin is saying and what Mahesh imagined, I think the true dream and the breadth and depth of achievement would be vindicated when we get to that day. There is another topic I want to touch upon, and I'll ask you, Ashish, again to comment upon this, is this entire thing around consent mechanism, where I am often told, and we are a provider, so I'm often told that, look, what is your SMS? What is this OTP? These OTPs are getting auto-filled. This SMS does not say that the FIU is going to store the data and not purge it. There are many, many interpretations, and believe you me, I have written SMSs myself. Just to dissipate the doubts in people's minds, I have written the SMSs myself, created 4 drafts and sent them to a company CEO saying, now you tell me, which one do you like and which one is transparent enough. Of course, by SMS rules, some of them get split into 2 because the message goes beyond 180 characters. That's a different story. Do consumers understand? Have we done enough to educate them? When will this backdrop of a consent mechanism which is not 100% ironclad, how do we get this thought out of people's heads?
So I think if you, I'm sure a lot of people use the AA system here, but as from a consumer point of view, the journey is multiple consents, right? So there's a first consent for the account aggregator. So let's say the consumer is on INDmoney app. He says, listen, I want to aggregate my bank accounts. So first he hops to the CAM screen. He gives the consent, then he gets an SMS from CAMS as an account aggregator, where everything is pretty much written as to what is the use case, et cetera, et cetera. And then after that, he is told, okay, you have these 4 accounts. Which account do you want to track? So he says, I want to track HDFC account. So again, he does an SMS. So it's actually not a very frictionless journey, because at the end of the day, this argument about whose data is it, etc. I can go to HDFC Bank app and I can download that statement, right? I can do the same activity. So we've actually added much more friction here. So consumers beautifully understand. If consumers did not understand, Anuj, they would have eaten us alive. The reason is because the system was not stable for a long time. And the only way for us to do was to educate the user that one, it's your data. Second, it's encrypted. Third is that you can delete it anytime. In any case, it gets purged. And fourth is that this is not in our control, right? You are actually doing the same activity that you would do on an HDFC app of downloading your statement. You're doing it here. And that's the education we've done. And as a result, otherwise, in early days, Mahesh, we were having like tickets and tickets and tickets. And then we realized that we have to educate, right? We can't hide in a wheel, essentially.
That's well said. That's well said. My personal opinion is that as an industry, we need more content around this, just a lot more of statements like Ashish just made, saying that it's not a single OTP, it's multiple OTPs. We are seeking consent at multiple levels, first to get you in, then to link, then to download the data. The consent mechanism is approved by the regulators, and I think that just needs to be a little more in the face communication.
I just want to also add one thing, and as the industry evolved, one of the things which was a pain for FIP, that listen, why are you refreshing? So to which obviously we said, listen, we want to give fresh data, right, to people. They have gone and pulled it. They want to see fresh information. So with a lot of back and forth, we said, okay, let's not put load. And now today's data on an app like ours, which is, I think, slightly lower user experience, we don't show updated data. We get the user to actually press the refresh button. And just so that, everybody's comfortable that, listen, it's not just an auto refresh happening. Having said that, there are still a lot of industry players which are doing auto refresh, which I think will get aligned pretty soon.
Very interesting. On the same lines, Mahesh, the entire mechanism around FIU behavior, purging of data, cybersecurity standards, And just making sure, like you said, I think it's a great outcome that the industry is not reporting frauds and misuse of any kind. Do you think we are at the right spot, or do you think we need to build stronger walls and ironclad this a little more?
So we have come actually in a very long way because like about 1 year ago the FIUs at the frequency they were pulling the data was extremely high, and we worked with all of them and what we call as the participatory governance. So, okay, that is our secret sauce of how we were able to build, and we came up with the fair use guidelines for each use case, at what frequency, how often, how much data you're able to pull. So I think we are now at actually quite a stable position from where we'll be able to take off, and you will see from Sahamati, after we have worked with all of you, we are about to come out actually with a report about the guidelines on how to show the consent, because app to app the what is shown and is not exactly the same, and the user is confused. So I think we have reached a stage where I think it is stable. Of course, we still have some issues on the data quality. We are not denying that, but few years ago it was about 30%, and now from few FIPs it's already 88%, 98%. So it has improved a lot. But from here now we are in a situation where we can, actually think about the new use cases, especially the hot use case, which will be, for all of you would be the LAS, the loan against securities. Instead of you're liquidating your investment and, spending it, it will be good if people are able to take a loan against securities, and the regulators have said until now you had a limit of 25 lakhs which you could actually take a loan against the thing. Now it has been increased to 1 crore. So with the help of AA, according to me, it will be the hottest use case which will actually come in the next year.
And that's again great to hear. I operate myself in the capital markets, and one of the biggest consumer assets out of the 75 lakh crore that mutual funds have, upwards of 55% is individual monies. The most under leveraged, the most secure, the most liquid asset. You get a daily NAV, you can liquidate when you like. And like Mahesh said and like Ashish said, these are emerging use cases which can completely transform things, because you can borrow at 10 or 11%. If your fund manager is doing a good job, he would return you 15% at the end of the year. You have no exit loads, you have no tax to be paid. You can actually pay him back from the gains you made in the mutual fund, and all of this can happens within minutes.
Yeah,
I know Ashish
I just want to add something since AB team is here, right? So the big use case out here is loan against shares. And that's going to be a very big account aggregator use case. But the struggle that we have as an industry is, and I think SEBI also wants, is interoperability, which means that I should be able to, just like mutual funds is like an open architecture, but shares and stocks aren't, and which means I can't, as a user, today's date, move from one CDSL account to an NSDL account, or a CDSL to CDSL, or an NSDL to CDSL. I think that's something which SEBI also wants, that there should be super easy digital interoperability, and that can really, really propagate loan against securities.
No, that's a wonderful observation, and rightly said Ashish that in the mutual fund system, no walls. It's a question of building some APIs. Today, if I go to a broker, I'm tied to the depository account of that broker. I cannot, unless I do an off-market thing and move shares from one place to another. So I'm sure the SEBI team is listening, and we will soon hear from them. The board in front of me says that time is up, but I just want to go back to Sachin and ask him on behalf of this group, what would you expect? What do you see happening in the next 5 years? What would you expect from the industry? And what do you see happening? Just like Ashish has this wish of breaking walls in the capital market system, what are your expectations and what are your thoughts?
Thank you, Anuj. So first of all, before I answer that, one small thing I just wanted to mention, as CRIF is a European company based in Italy, interesting thing happened is that when we took a license of Account Aggregator, obviously there was a lot of back and forth, and we already were running a bureau. But so we were told that in Europe we have open banking, and you can use the same platform on top of Account Aggregator to create your analytical engine and your TSPs and everything. We said wonderful, and we brought it. But now we realize that the Indian use cases are so powerful that anywhere in the world, this kind of innovative use cases are not being used, and they are plenty. In fact, now our headquarter team has started calling that, we do open banking, India does open finance. So there's a difference. So, and that's a really, really a great sort of achievement for the ecosystem we have here, because we are not limiting to banking, we are spread, and that's what we talked about. Just in a minute, answering a second part of my answer to Anuj. I think we are on the right path. Some things are taking a bit more time. I think, interoperability team is already working. Some POCs are going on. Joint accounts, business accounts. I think there's a lot to be done. I think obviously the credit penetration, credit adoption. I mean, I know there are some challenges of multiple OTPs, OTP with XYZ, ABC, whatever. But if some of these things in 3 to 5 years, if we do, I think the adoption, which is in, let's say, low single digit at present, growing with 20% month on month. Today, bureau adoption is 100%, except gold loans, right? I don't see that in 3 to 5 years' time, account aggregator adoption in the lending industry shouldn't be close to that number, or maybe at least high double digit, 50, 60, 70%, yeah. So that is something which I think I look forward to see with removing some of these teething issues and come as a, SRO and build the whole ecosystem together, yeah. Thank you.
Wonderful, wonderful. I think I could have gone on and asked more questions and debated a lot more of the topics, but I continue seeing the board. The time is up. Thanks very much, Ashish, Mahesh, and Sachin, for participating. Thanks very much to the audience for coming in the early hours to witness what this panel has to say. And I look forward for all of us to continue working together. Sahamati will be designated authorized SRO soon, to continue scaling the industry and doing more and more innovation to teach the rest of the developed world that India is India, and some of the best innovations will come from here. Thank you very much. Thank you.